Hello folks, this is Daniel Bennett from Advanced Portfolio Strategies with an educational economic update for July 2018. In this month's video, I'll discuss some of the major headlines that influence markets in June. I'll also provide insight into what these developments could mean for you as an investor. Please stay tuned at the end of this video for a required disclosure statement. We are now halfway through 2018 and the markets have given us a lot to think about this year, including increased volatility. If you recall, January brought new record highs for major U.S. indexes. Then concerns about interest rate jumps reversed some of the gains. Next, equities began to rebound thanks to positive economic data and corporate earnings before the current trade tension brought volatility back to the markets. Amid these fluctuations, indexes have had mixed results. In June, the S&P 500 added 0.5% and the NASDAQ increased 0.9%. Meanwhile, the Dow dropped 0.6% during the month. For the year's first half, the S&P 500 was up 1.7% and the NASDAQ gained 8.8%. The Dow, on the other hand, was in negative territory for 2018, losing 1.8%. From economic data to political updates, much of the information received last month also painted a mixed picture of current circumstances. For example, unemployment hit its lowest level since 2000, but the latest gross domestic product reading missed expectations. Also on investors' minds last month was this year's second interest rate increase for the Federal Reserve. While announcing the increase, the Fed gave an optimistic view of the economy's growth and indicated that 2 additional rate increases could occur this year. Throughout June, we also experienced an array of dramatic geopolitical headlines. President Trump met with North Korea leader Kim Jong-un in a highly anticipated summit. Despite expectations, the media had little effect on stocks. Concerns about a trade war, however, weighed down the markets for much of the month. From Canada to the EU to China, trade tensions between the U.S. and many other countries continue to rise. The U.S. added new tariffs to goods from some of our largest trading partners, and those countries promised their own tariffs in response. While the drama affected stocks, markets have remained relatively stable despite the escalating rhetoric. So far, fundamentals have been the true market drivers this year. As we move into the third quarter, trade will be an important detail to monitor, but it's certainly not the only one. In particular, corporate earnings will be key. The most recent data indicates corporate earnings may have grown by 20% in the second quarter. If the results mirror these predictions, such performance would be the second fastest growth since 2010. Currently, the markets feel like they're on a seesaw between strong economic fundamentals and escalating geopolitical tension. Amid this back and forth, we will be searching for balanced perspectives on where the economy truly stands and what may be on the horizon. That's it for this month's Educational Economic Update. Once again, this is Daniel Bennett with Advanced Portfolio Strategies signing off for the month of July 2018. Please remember that nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call at 310-776-6549. We'd be happy to talk with you.